Let's say you're at the dinner table, having a friendly debate. Will the US confirm the existence of aliens? Will Taylor Swift get engaged this year? What actor will play the next James Bond? Or, who will win the presidential election? You might have a hunch, but how much actual money would you be willing to bet on it? Around the world, people are doing just that and betting huge sums of money on real-life events through online platforms called prediction markets. People have already bet over $2 billion on just the outcome of this year's presidential election. Prediction markets have become a place where a growing number of people can make or lose tons of money. They've also become a valuable source of information cited by the biggest media companies in the world. But as these betting sites have ascended into the mainstream, they've also become a lightning rod of criticism. So why have these platforms suddenly become so popular? And why is there so much controversy around them? Let's talk about how this all actually works. Think of it like how FanDuel or DraftKings operate, only prediction markets go way beyond sports. The stakes aren't based on a game, but on real events. There are a few key startups that are dominating the prediction market landscape. I'm going to focus on some of the biggest and most popular ones: Polymarket, Kalshi, and PredictIt. While all these sites operate real event betting, that's pretty much where the similarities end. The mechanics of trading are different, their legal status is different, and they attract different kinds of users. With billions of dollars being wagered on these platforms, it still isn't clear if any are profitable yet. In general, the simplest way is to take a small fee on each transaction. That's how most exchanges make money. But generating money is one thing. Avoiding being shut down by the government is a bigger challenge. Historically, regulators stifle the growth of prediction markets. I'll talk about why in a moment, but all of these platforms are in their own versions of a legal gray area. Polymarket is the largest and was founded in 2020. It's an offshore market that operates on the Ethereum network. But in 2022, the CFTC fined Polymarket $1.4 million for regulatory violations. As part of their settlement, users in the US were banned from engaging with the platform. But it continues to draw in hundreds of thousands of international users, and many Americans skirt the law by using a VPN, which, to be honest, a lot of people know how to do. Kalshi is the only platform that is actually regulated by the CFTC. The platform launched 3 years ago and operates under the same rules as other derivative markets do. But doing things by the books isn't easy. Kalshi is still embroiled in a legal battle with the CFTC. Last month, a US appeals court unpaused election betting on Kalshi, making it now legal to place up to $100 million on the US election. This ruling has also opened up doors for more traditional brokerage platforms to take advantage. PredictIt has been around for 10 years and is in a little bit of a different situation. Honestly, it's a little confusing. It's technically operated as a non-profit out of Victoria University in New Zealand, but it's made for American users. While it's had its own legal battles with regulators, as of now, it can operate in the US. At this point, you're probably wondering, okay, so how do users make money from their bets?
Let's say you bet $100 on Trump at 50-50. Then in a few days, the odds go from 50% to 70%. Then you can exit at 70% and you would have made a 20% return before the election even pans out.
Prediction markets in various forms have existed for centuries, so why are they all of a sudden exploding? Well, the election certainly has a lot to do with it, but that's not the whole story. Over the past few years, Silicon Valley and Wall Street sprung up to back these companies, deepening these sites' resources and therefore their reach.
VCs and investors are interested in prediction markets because one, the market opportunity is massive, and two, it's the mission of prediction markets, which is this mechanism for truth.
Kalshi has raised over $30 million from big fish like venture capital firm Sequoia, Charles Schwab, and Henry Kravis. Polymarket has investors like Peter Thiel through his Founders Fund and the creator of Ethereum, Vitalik Buterin. The company raised $70 million just this past May, and the site's traffic has grown 20 times since then. Another reason Polymarket has taken off is cryptocurrency, which allows the platform to be decentralized and anonymizes its users. So, who are the people betting billions on prediction markets?
Average people, some of them have traded in financial markets before, and actually a lot of them have not. They just like reading the news. Two, we have market makers and basically institutions that come and trade more high frequency. They're more active on the product and so on. And three, which is the last bucket, which we have basically like brokerages that over time are going to integrate on Kalshi.
And as these platforms have become more normalized, publications are citing and referencing prediction market odds along with traditional polling. But the jury's still out on prediction markets' accuracy. To figure out why some people trust prediction markets, I spoke with the guy who literally wrote the book on it.
The basic premise is that under the right circumstances, groups of people can be remarkably intelligent and oftentimes even smarter than the smartest person in the group. And the key phrase in that definition was under the right circumstances.
When people have skin in the game, they don't lie. When people put money behind their views, they lie less than someone who's on TV doing punditry or someone who's tweeting without any consequences.
We see this logic most obviously with the stock market, because the people trading on the stock market have public information about companies and aren't just randomly buying or selling stocks. But it's not quite that simple. James argues that for a crowd to be wise and for their opinion to be valuable, there need to be 3 conditions. 1, you want people to be decentralized, meaning that they're spread out in different locations. 2, you want people to have an incentive to be right, and what's a better motivator than money? And 3, you need a diverse group of perspectives in the crowd who are thinking independently of each other. But of course, prediction markets can be wrong.
So the 2 main criticisms of prediction markets are, 1, they're sometimes inaccurate, and then 2, they can be manipulated.
If their ability to be correct also rests on the framework James outlined, how accurate these markets are can be easily influenced by peer pressure, a bandwagon effect, or bias. So the user base, who is betting on these markets, is very relevant.
Because you have to use crypto to participate in Polymarket, that obviously narrows the range of people who are going to use it. And because it's technically illegal in the United States, that also theoretically narrows the range. So my starting assumption would be that Polymarket would probably skew a little bit to the right, because crypto bros tend to be a little bit more right-wing in their politics or libertarian.
This can be especially true if a single investor bets a huge amount on one wager, resulting in their perspective being disproportionately represented. Although, one platform, PredictIt, has a betting limit of $850 that can help prevent that. And if the accuracy of these markets depends on how knowledgeable these bettors are, that means some wagers have a better chance of forecasting the future more correctly than others. For example, the public has way more information about how many times the Federal Reserve will cut rates over the next quarter than something like the likelihood of Taylor Swift getting engaged this year. That all being said, political polls have a lot of the same problems with bias and inaccuracy. Confidence in US polling data has plummeted over the past decade, since many polls were off in 2016 and 2020. So, to many advocates of these platforms, the issues with potential inaccuracy are outweighed by their utility. They think if the markets are truly efficient, attempts at manipulation would still be balanced out by smart traders who see an opportunity in the price disparity and would bet the other way. Here's one more nuance for you. Using inside information to bet on the stock market is obviously an insider trading violation, but it's a little less cut and dry when you're talking about betting on a range of real-world events. But it gets even more complicated, because some argue that prediction markets become more accurate the more insiders participate. That sure makes for a complicated set of legal and moral questions. So, I sat down with Oregon Senator Jeff Merkley, who has been vocal about his opposition to betting markets, to understand why he sees these sites as a threat to democracy.
The biggest risk here is a corruption of the purpose of elections. It is absolutely like saying, well, we're going to allow betting on a ball game, but the people who are betting control the umpire.
When you're betting on elections, the same people betting millions can also donate to campaigns, post about politics, and support a candidate in other ways. But supporters of betting markets point to the fact that election betting is legal in other democracies, like the UK, Ireland, and New Zealand, and haven't caused any high-profile incidents of market manipulation there. And regulators like Merkley are not waving the white flag yet.
So who knows how the court will rule. But assuming we lose, I will introduce legislation.
While Kalshi's recent appeals court win was obviously a big boost for the industry, one question now is how these companies will survive after their big cash cow, the election, ends.
We are not worried about Kalshi's continued momentum. The way we think about the election is it's an on-ramp. It's an amazing marketing and branding moment.
There's also a set of concerns about whether prediction markets are ethical or harmful to users. After all, we're just beginning to see the fallout from legalized sports betting, and users are betting a lot on these sites. One Polymarket user lost $2 million on one single bet when Biden dropped out of the presidential race this summer. For others, seeing users profit off of events that directly harm people's lives, like natural disasters, and in the case of Polymarket, wagers on war or violence, feels just plain wrong. But these kinds of financial platforms aren't new. Prediction markets have survived many versions of various hype cycles, and only time will tell how they evolve next. Thanks for watching. If you want to hear more from me, subscribe to the Brew Markets newsletter, where our latest market coverage will hit your inbox every afternoon. Click the link in the description to subscribe.